Gold hasn't done as well as you might expect, with inflation near its highest in decades. Our guest says, though, there's an important reason, or a couple of important reasons, to be bullish on gold miners, and not necessarily the industry giants. We are joined by James Rasteh, founding partner at Coast Capital. James, thanks very much for coming on the show.
Thank you. Nice to be with you.
Just give us the one or two reasons why you're bullish on bullion, are you? Gold? Set that out.
Very respectfully, we are agnostic to bullion itself, although we believe that there are so many reasons to be quite bullish on gold. We're not macro investors, and therefore we do not invest based on our macro views, but we are very bullish on very specific gold miners due to a very specific thesis that we have. We believe there's a lot of consolidation to be had in this space.
Thanks for clarifying that. So you're agnostic, as you say, on the actual price of gold. One thing, though, that you were explaining to our segment producer, Sydney Punchard, you reckon we're in a period of a major decline in global gold production. Can you talk to us about that?
Yeah, look, so the fact is best not to share any opinions about my opinions, but the fact is that last year, we spent 3 times as much capital looking for gold as an industry than we had spent 20 years ago, okay? And with 3 times as much exploration capital, we found only 5% as much gold as we had found 20 years ago. So we're just running out of gold to produce. For every ounce of gold that's being taken out of the ground, we're only discovering 0.15 to 0.2 ounces of mineable gold. Very often, the procurement of licenses to take these discoveries into production takes much, much longer. And often enough, they're in jurisdictions where you just will not be able to mine these. So in light of these considerations and these facts, gold production around the world has entered a period of decline like we've never seen in the history of humanity. But, you know, nobody wants to talk about gold because it's boring. It doesn't have upward momentum or the long list of charlatans that cryptocurrencies have. And so therefore, it seems quite unexciting. And that's precisely why we're very excited about the industry.
When you talk about, people scrambling to find deposit, I'm just thinking about Barrick Gold and that Reko Dig project in Pakistan near the border with Afghanistan. It's an unstable part of the world, but they're going to invest heavily there.
Not only is it unstable, we think that the folks at Barrick, we've had our differences of opinion and marked ones with the CEO of Barrick, but he is one of the most talented and aggressive and thoughtful, and I have no doubt ultimately value creative CEOs in the industry. I mean, you know, Barrick has very strong leadership, and we think Newmont and many of the large companies now have exceptionally strong leaderships. And that's the opposite of what was the case, I want to say, maybe about 10, 15 years ago across the board. But I think the point that you make is forget about just that particular troubled spot. In the rest of the world, in so many jurisdictions, these gold mines have become hyper profitable operations or very profitable operations. And the tendency to want to nationalize these assets, these national resource assets, is as high as it's ever been. And I do think that there's a very large risk of continued, because we already are starting to see it, nationalization of assets, particularly in emerging markets.
That's an interesting theme. Let's get to some stock ideas you have. JAGUAR Mining, tell us what they're all about. And you think there's potential for a takeout of this company?
Look, JAGUAR has sizable deposits in one of the most gold-rich regions of Brazil, in what's called the Iron Triangle. Based on only the reserves that the company has, we foresee, certainly 1.5 to 2 decades of production. And the company is currently generating just about 20% of its market cap in cash. And so when you think about decades of that ahead for the company and a lot of other or incremental potential or upside based on deposits that they have, which we haven't drilled to substantiate in terms of size yet, I think it's an extraordinarily undervalued company and certainly a takeout candidate at this point. Just so you know, if I look at the production profile of a company like Jaguar, which we're very careful about the geographies we invest in. Brazil, and this particular part of Brazil, we are extraordinarily comfortable investing in. And there's a company in Canada called West Dome, which has exactly the same production profile and has very similar production cost bases, but is valued at 5 times more than Jaguar.
Oh, that's
and
interesting.
It's a Brazilian discount, which we think is unwarranted, but it's also a sort of misunderstood company.
Okay, that is interesting. The chart looked a bit funny, but I think they've had at least one reverse stock split over there at Jaguar. We're tight for time. Argonaut Gold, tell us why you think investors should take a look at this one.
Oh my gosh, Argonaut is one of the more exciting. So I must admit, the investments that we make in this industry are sort of much more exciting than the average investment that we make.
But this one's down a lot, though, isn't it? Argonaut.
It is, which is why we're particularly excited about it. We happen to know some of the executives and board members of this company, and we think, again, it's so important to have very thoughtful operators and leading operators associated with your companies. And certainly people like Steve Lang and other board members and members of the management team are extraordinary people to bet with and bet alongside of. But Argonaut has an unfortunately named project called Maginot, which for me references back to the defense line in France, which had a very unfortunate ending. But Maginot, we expect, is a large asset of theirs that we expect to see go into production next year. And we expect to see about 150 to well over 200,000 ounces of gold produced there. If we think about their AISC being about $1,100 per ounce, and if we think that eventually they get to 270,000 ounces of gold produced per annum, we're looking at a company that should be generating up to 3-digit millions of dollars in terms of cash flow, and which has, as you can see, a market value currently of, let me use my Bloomberg as it were, of 339. So we think that we're buying this company at potentially, 1.5 to 2 times normalized cash flow.